Thank you all so much for coming this morning. We are super lucky to have this fantastic lineup. Tarun will also be joining us a little bit later. This morning we're going to be talking about AI, crypto, and the rise of autonomous capital. And some old friends and new friends here. Just to introduce our lineup here, Alex Pack, who is the founder and managing partner of Hack VC, also one of the founding partners of Dragonfly. We have Jordi, who's the founder and CIO of Selini, which is one of the most active quant firms and LP firms in the space. And we also have Amjad, who is the CEO and founder of Replit, which is one of the fastest growing AI coding platforms with more than 30 million developers on the platform. I've actually used it. Over the summer, I was hacking around building some applications. Maybe some of you guys in the audience have used it as well. My name's Irene. I started in the space after dropping out of college, joining Layer Zero, where I was head of strategy. Afterwards, was a venture partner at Bain Capital Crypto, and am now an angel investor, investing across traditional AI in companies like Replit, and I also DeFi. So to jump right in, I want to ask you guys to actually define what autonomous capital is.
So I think it's the same as AI itself, where there's just different levels that you can start imagining from the past into the future. Obviously, autonomous capital, it could just mean having a strategy that just trades for you and you just put money. That's been happening for many years in quant trading. At some point, you start getting into the fully autonomous capital, where the AI just thinks for itself, deploys capital, potentially is paying people. So like we're kind of being incentivized by the AI, and that's probably a world that's coming soon.
What are the minimum primitives that make that term meaningful? If you want to zoom in on that a little bit more. And Alex, feel free to weigh in here, since I know that you have invested across the whole spectrum of different crypto and AI projects.
Yeah, I think the even like 10 years ago when I was getting into crypto, the sort of fantasy use case was that one day we would have like Uber or Grab running completely on chain, and there would just be cars that would come pick you up, and you would pay with your stablecoin wallet or something, and the cars would be owned by some like shadowy DAO that's like collective ownership, and it would optimize things on its own, and it would figure out pricing curves and price charges, and the entire company like would be run by this like DAO that is basically managed by an AI. And we're still a little ways away from that, but I think the concept of autonomous capital is like gets us closer towards that, right? So, but there's a lot to do. Like there's like in the last 10 years, we needed like stable coins, we needed wallets. The agents have to improve significantly. There's an idea that you can just sort of trust an AI agent to like go make money for you or run your business. And that catastrophically will fail if you did it today. Like if you ran the AI for more than an hour or two on an important task, it will mess up usually, or it'll go off the rails. So there's more on like the improving intelligence of models and durability. And then I think there's the whole layer of like, how do you connect your agents to like commerce and payment rails? Although the stuff that like Cloudflare and Coinbase and Ethereum are doing now is a step towards it, I think.
Yeah, I mean, autonomous capital, the ultimate form is probably not stable coins unless they're maybe, algorithmic stable coins. I think right now having USDC or USDT theoretically, like these types of things that can get whitelisted, blacklisted, it's like pulling the plug if you really need to as an emergency. And I think it's important that we have those rails for now, but it's inevitable that crypto just brings this like new layer where, if someone's sending, ETH or Bitcoin or something decentralized, you can't really stop it. And if it's doing activity that it just decides to do, I think some of the, you do a lot of AI investments, and I'm sure that a lot of people care about safety. Obviously, autonomous capital adds a lot of, it's like the Autobahn in Germany. Like you get a lot of benefit by going fast, but you got to be really, really careful. So that's one layer. And then, of course, what's actually happening with the execution environment. Crypto's been experimenting with trusted execution environments, and those components are quite mature now. So increasingly, we will start seeing those pieces come together. But I fully agree with Alex that just giving an AI money and just telling it to go off and multiply it for you, that's a little bit of a pipe dream, because that's not how markets work. Like, there's always efficient markets, and if something is that easy, it'll just get competed down.
I think it's really important to understand what's actually novel with autonomous capital and what has existed previously. So pre-AI in TradFi, we've had high-frequency trading firms, we've had quant strategies, and automated market making in crypto as well as in TradFi. And then pre-AI in crypto, we've had trading bots, we've had MEV, and now with AI on-chain in crypto, we have agents which can trade without human intervention, agents which operate wallets on-chain and can interface with multiple protocols at once. And that introduces a whole different surface area of risk. This is actually an area that I think I definitely want to press on with Tarun when he gets here. He's certainly the expert. But Amjad, something that I'm really curious about with your unique vantage point, you engage deeply with AI devs. And I want to understand what you think the maybe conceptual and cultural differences are from AI developers and crypto developers, their point of view on AI agents. And from your time here, I know you're also going to the Network State Conference, what you think the differences are. What are the curiosities as well?
Yeah. Well, just to give you a bit of backstory about how I came to sort of thinking about crypto and how it relates to AI and software. Anyone here read the book, The Sovereign Individual? Disappointed, it's not that money. Well, it should be, it's like the crypto canon.
Do you want to give the 101?
Yes, so basically in the late 80s, early 90s, this two kind of British intellectuals talked about how computers change the landscape of politics, the landscape of sovereignty, and how the individual is going to be a lot more empowered in the future. And they go into specific details. It's one of the books that actually predicted Bitcoin and the rise of crypto, the idea of digital assets. But the really cool thing there that really captured my imagination is the idea of being able to spin up companies on the fly and be able to coordinate people and agents and be able to coordinate large infrastructure and software all seamlessly. Right now, if you think about making a piece of software, think about how many services you'd have to sign up for. If you want a piece of database, you go somewhere. I mean, at Replit, we're trying to centralize everything. But in reality, we don't have to do that if the market was a lot more autonomous. So if I'm prompting an agent to go build a piece of software for me, the agent should have capital, should have a wallet to be able to go provision a database for me, go to Anthropic, get an API key for me, go hire someone for me. If the agent is getting stuck, it should be able to go hire a human or go hire another agent. If I want to do a security audit, it should be able to go get a security agent from the market and be able to hire it. Now, if you imagine that kind of future, you could sort of start to imagine this idea of a $1 billion single person startup, which everyone in AI talks about. So, to the mindset of people in AI, everyone knows that this technology is going to create an amazing amount of entrepreneurship, new wealth creation, new startups. It's going to make companies leaner. It's going to make it so that there's a lot more freedom in terms of how you want to work and what you want to work. But crucially, there needs to be very low friction commerce primitives, right? And TradFi has just not been able to get there. And I think that's been the opportunity for crypto since I started looking on it. Programmable money, that's really the promise. Honestly, it's been disappointing. And my challenge for you guys today, because I'm like not from the crypto world per se, I don't really live and breathe in it, but why hasn't it happened? Where are the primitives that allow a company like Replit to be able to have our agents have like a seamless wallet, be able to do trusted execution, be able to have all the security primitives and the underlying controls and the audits and all of that stuff. I don't think there's like Base and other things that are coming online now, but really now is the time for you guys to build the primitives for us so we can go build the future of work, essentially.
Can I ask, what do you think the maybe cultural gaps are that lead some of the developers you work with to be hesitant to experiment with some of these new primitives? Because I know, for example, that Jordi, Alex, I certainly have seen pitch decks, maybe not ones that I ended up engaging with, but founders in the crypto space who are trying to create these primitives. Yeah. Building these sorts of one-click wallet, seamless onboarding types. Are there cultural gaps that you see, or a different understanding of autonomy than the way that people in crypto
certainly
think about it?
Like the understanding of autonomy in AI is about action and execution. Autonomy in crypto is about custody, trust, and things like that. And I think crypto from the outside for people tends to be a little bit inscrutable and really hard to understand because the language and the jargon is so heavy, and oftentimes people have this feeling that there's so much scam. I don't know what's real and what's not. I think there's a place for a developer first company that's coming in and simplifying everything, creating these really clean interfaces, and going out and showing AI developers what's really possible. Think about also the set of incentives in software today. I came up in open source software, and one of the things that I realized almost immediately by building a piece of infrastructure that really big companies were dependent on, that I just can't make a living as an open source developer, right? Like, I can get GitHub stars, but I can't eat GitHub stars. You need money, and I think incentives is another thing that the crypto community understands that I don't think the AI people really think about all that much. We think about all the nerdy stuff of how to make agents run for 7 hours, 30 hours, whatever. But how do these incentives work? And so why isn't there a version of GitHub where open source developers have the underlying commerce infrastructure to be able to monetize their work easily? You can imagine a package manager that allows you to pay for packages on demand. We just saw NPM had a huge supply chain attack where someone took over a GitHub package, and every time you install that NPM package, it will create a worm that takes over your other packages. It's a huge issue. The problem is that because there's no friction, there's no money transfer. It's all kind of you can have bots and attacks and all sorts of things like that. The thing that crypto really understands is that also money can be a form of protection. Mm-hmm. So if you add a transaction cost, not only creates the right incentives, but also protects against the wrong incentives. There's so much opportunity. So I think it's just like new companies that are really focused on those.
That's what I thought that Elon was doing with Twitter. He just added that cost to get the check marks, and then I thought that would stop the spam. And then all these spammers just bought golden check marks for $1,000 and still managed to make that business model work. So unfortunately, like even adding some cost doesn't fully eliminate the problem, but it does reduce it.
Well, there are so many crypto primitives that I think could be good, like staking and challenging. And I don't think it's been fully explored. And again, I don't think the traditional finance infrastructure has the right primitives.
Mm-hmm.
This is a fantastic opportunity for me to welcome and introduce Tarun, who just arrived. I've had the pleasure of working with Tarun in different capacities. Tarun is the founder of Gauntlet, Era, and also co-founder of Robot Ventures. And on this panel, certainly the expert of risk. We've defined autonomous capital. I think one thing that would be very interesting to talk about is risk in autonomous capital. So autonomous strategies compound governance, model, and operational risk. I'd love to hear from you how exactly these three risk vectors compound in that way.
Yeah, I think one interesting thing about agents is how do you attribute risk versus like humans, where there's like kind of a natural attribution. This is like kind of the thing people always talk about with insurance and AI, right? Like I have a self-driving car. Do I attribute an accident to the software? Do I attribute the accident to the LiDAR breaking? Do I attribute the accident to the open source package that was imported that happened to have the bug that caused the crash, right? Like there's like many different layers, and it's not clear any single one has full attribution. I think agents have the same thing for finance. Now, one kind of interesting thing is in the last 2 days, actually, there have been a bunch of exploits against trusted execution enclaves, which a lot of agents that are interacting with crypto right now tend to use, mainly for computational capacity constraints, as well as the fact that you having to customize your model to the cryptography you're using is just too expensive, and TEs allow you to kind of have a stopgap. But there are some really dangerous 0 days there, right? So what happens if an agent is running on a decentralized network and one of the node operators who happened to run the enclave that your agent's code was run in didn't upgrade their software? They have the exploitable TE. Do I blame the node operator or do I blame the network? So I think like there's this attribution problem that is kind of fundamentally different in the agent world, because I don't actually know whether I blame the agent software writer who might not have any idea what hardware it was run on. So they don't know that the TE that was used was exploitable, right? But they did choose to use a TE as their form of execution. So I guess the main thing I'd point out is like humans are easy to blame, right? I can like say you fucked up, like you made a choice that was bad, or governance voted on something that was like bad, and there's sort of some notion of attribution. And I think the agent world actually is much harder, and the more complicated exploits get, the harder you're going to have a time of attributing risk. So maybe that's not really an answer as much as just like why it's a more complicated question, I think, than people give it credit for, especially in a world where like there's constant 0 days against hardware, software, supply chain attacks that like impact agents. There have been agents who are impacted by some of the TypeScript exploits and package managers. There have been tons of things like that, and I think crypto at least gives you an incentivized bug bounty to find them. So I think that maybe is the only positive.
Well, the primary work that your team at Gauntlet does is advising protocols and writing publicly on how to price risk. So I'm curious to understand your point of view on the premium you would put on the risk here, and also in your perspective, who bears the primary risk in autonomous capital?
This might not seem like the correct analogy to smart contract risk, but I think a lot of the edge use cases of agents right now, such as lean theorem proving, like companies like Harmonic, and smart contract risk assessment are actually very similar in that the AI agent itself is not the actual thing that determines the final state. It's actually this execution environment that is formally checking like whether something was correct or not. And that process is very hard and rigid, whereas the AI agent's much more fluid, right? It's like searching through the space of reasoning prompts and like giving you a final output. And so I think one important thing to remember is there are some things that are worst case problems, like they're kind of like you need to be resistant under every possible attack. And so that's the type of stuff I think that you see in DeFi. That's the type of stuff you see in lean theorem proving. Whereas a lot of AI is built around average case behavior, right? Like I ask the same prompt 10 times, I might get 10 different answers. It's not deterministic, but those answers are close enough, and I'm fine with that. And in general, finance stuff doesn't work that way, because that tiny gap is usually what you're exploiting, right? The tiny differences between the same question being asked twice. And I think effectively to make AI, the more deterministic you make AI agents, the easier it is to do this type of risk attribution. And I think like realistically right now, the only people I know as a lab who are really focused on this seems to be thinking machines, where they're like trying to reduce all non-determinism as much as possible. And I think if you can get to that state, then you can kind of be a lot more clear on like the finance, how to avoid finance exploits. So that's, I guess what I'm saying is like, there are things that are hard problems. There's things that are easy on average problems, and like how to connect those two is like what is still being figured out right now.
So there are two threads to what you said that I want to lean into. The first one is you mentioned Thinking Machines. Thinking Machines is not a crypto native team. And backstage, we were talking about a talent problem in the industry. It's something that I think about a lot as an angel investor. When you're investing at the earliest stages, I certainly think that it's a lot more about investing in the founder. I know Tarun Robot typically invests at pre-seed and seed, if I understand correctly. And Alex, I think that's true for you as well. Yeah. And then the second thread there that I'm curious about is for you, Alex, and for you, Jordi, how you guys diligence teams and also just generally strategies that your own teams are building that are automated. So on the talent side, what are you guys seeing there? And also, Amjad, you are in SF. You see, I think, some of the best talent in the space, and oftentimes young people who I want to pull into crypto. Talk to me about that, all of you guys.
I mean, I have to just, we're going to agree to disagree. I think that the talent building in crypto AI is quite good and is on par with, I invest in both sides, traditional AI as well. The people that I talk to in the crypto AI space are just as smart and talented. It's a harder problem because it's like, it's a newer, less defined space, but I think some massive things will come out of it. And yes, a lot of the teams do have to be based in SF. A lot of the teams we invested in, Prime Intellect, Eternus, a few others that are, of course, around all the AI labs, and they're talking to Anthropic kids, and they're interacting together. So they're not any dumber than the other kids.
Of course, yeah.
I think it's very difficult to find the right product market fit in AI crypto, but I think in 2, 5, 10 years, there'll be massive winners. Right now, obviously, we had the wave last year with, the more like meme coin agent kind of trading, this kind of stuff, which, it always starts with speculation. I think in the next few years, the categories, like in 2 years, I would say we'll start having some very interesting autonomous capital things in like the wealth management side, helping people manage their finances. And I think crypto is like a much more international way where people can get exposure to, these days you can tokenize, there's a ton of like XAUT gold, everything's coming on chain. You can start having intelligence and autonomous capital in your hands in an app. Someone's gonna do this super well. It'll take a couple years. I think in 5 years time, you start having actual communities. Obviously, we're starting seeing AI agents basically potentially be parts of governments. You can't corrupt them, and so there's a way where they're more good for representative democracy. People just kind of give their preferences, and intelligence actually acts on their behalf instead of humans that are more corruptible. So I think a lot of that stuff will start to appear in about 5 years, and then in 10 years, I'm expecting that. I love Bitcoin. Bitcoin's great, but I do think that there is going to be space for some new forms of currency that are, more designed for the AI age. Whether that's, we're seeing people trying to tokenize compute or intelligence units or whatever it's going to be. It'll be interesting, and I think at some point that will start to appear as well.
Yeah, I think there's 2 points I want to make about the talent thing. One, I think the adverse selection bias of being a crypto founder has actually always been the case. It's a fact that the best technical founders, by and large, are in America, or they're not necessarily Americans, but they find their way to America eventually. And up until 6 months ago, there was a very real chance that if you were a successful crypto founder in America, you had over 50% chance of going to jail in the near future. And that has been the case for a decade, right? So if you could build a multi-billion-dollar business like Amjad did without the risk of going to jail, or a very small risk maybe, not 50%. I don't know what you're up to in your personal life. If you could do that, no brainer. You would do that all day, right? If you're a rational actor. And so it takes a certain kind of person who's just very ideologically interested, or whatever, they're a misfit or something like that, to go into crypto and be a crypto founder. And I think the crypto AI intersection is seeing this situation as well, where there's still a lot of regulatory risk by doing crypto AI. And you have to understand both things, right? And I found this too, I've invested in 50 AI companies going back to 2017, and I've seeded 10 multi-billion-dollar, even deca-billion-dollar, totally non-crypto, just straight AI companies, right? So I've seen both stages, and yeah, the amount of founders that can do that, but then can also understand tokenomics and incentive design is very rare, right? And it's also the amount of investors. Very few traditional VC AI investors are able to invest in the crypto AI category. They just know that they'll get fleeced by crypto AI native funds or something. And then the second thing is that my takeaway from what Tarun was saying, which is still a little inscrutable to me, is there are a lot
Sorry,
of
Alex.
it's okay. I try to bring it down to the material plane. Is that there are still a ton of like very wonky infrastructural problems needed to be solved to sort of blend AI agents and thinking machines to like commerce and finance, right? And so you need like wonky nerdy founders to go figure out like how do you create these like decentralized markets for GPUs and compute and inference on chain. And so it's not as sexy. Like there's not as really. I'm pretty bearish a lot of like the AI consumer plays, and I'm more bullish on the AI infrastructure plays that sort of make this stuff a reality and allow like AI trading to actually work for more than like 2 to 3 hours. But that's not as sexy. It's not as easy to underwrite, So it takes time for us to get more to the consumer phase like we're doing in normal crypto right now.
I think crypto has potential advantage in talent in that you can make money much earlier in life and you make both loads of money. Like, so, I grew up in Jordan and I started my career in like just building open source software. I actually had the idea for Replit like maybe 15 years ago when I was in school, maybe more. And it was like, there should be a place on the internet where I can go with nothing but an idea and be able to build a business. And I had a lot of business ideas, but it was really hard to get started. Like just installing the development environment was hard. Replit kind of solved a lot of that stuff right now, but like at the time, I just had to build a lot of that infrastructure components, and I didn't make much money on it at all, actually. Despite that, like really large companies in the US and other places were using my software. So again, it goes back to this idea of incentives. If I'm a kid today and wherever in the world, and I can go pick up one of Tarun's bug bounties and like make $100,000 in one shot, that's amazing. That's like never happened before.
Yeah.
And you have a talent pipeline that AI doesn't have because there's no AI bug bounties, right? Anthropic is not putting out like challenges like that. And so I think leaning into that is very good. There are also political forces that are at play that I think is potentially advantageous. As an American, it hurts me to say this, but like America is not very welcoming to immigrants as much anymore, right?
Yeah.
And so I went to the network school in Johor yesterday, and I found a lot of kids there that would have otherwise been in America, but actually they're going there, they're spending fraction of how much they would spend in America, and they're starting to build businesses there from the internet. And like no one knows that they're not in San Francisco. I know a lot of kids that are starting companies on Stripe, Atlas, they're Delaware based. There is from VCs via Zoom. No one knows where they are, so it doesn't really matter anymore. And I think crypto leaning into that model will create a pipeline of talent way earlier than someone becoming established in their career and having enough money to go and move to San Francisco. So I think again I would lean back that the incentive structures in crypto could be very advantageous for hiring developers.
I would actually add one thing, which is I think it's actually a little bit of like a lack of imagination in the sense that in AI, it's very easy to see like sci-fi, the Turing test, all of these notions of like what it means to be more intelligent, right? There's like a clear notion of like my intelligence has gotten better. In crypto and AI, there's no like koan of wisdom. There's no like, oh, this is the problem that you must solve. There's no grand problem that crypto AI could solve. Like the best I could come up with is make an AI agent that like hedges its GPU cost and like costs much less than like all the other prevailing models. That's not like very inspirational to like a. I
don't know. I mentioned the book Sovereign Individual earlier. When I read it, I got super fired up. Like we can build a world where individuals can build multi-billion-dollar businesses and they can have political power and all that stuff. I think there's a version. I think Balaji does a good job at this. There's a version of crypto that is incredibly inspiring and exciting for the future, but not many people articulate that. I agree.
Yeah, I just feel like the AI narrative, like super intelligence is very like easy to grok. If I'm like a 15-year-old who's really smart somewhere in the world, it's very easy to imagine this idea that this machine is going and doing all this stuff for me. It's very hard to imagine this machine is doing things with money for me as a 15-year-old. Yeah. That's like really, you know what I mean? Like, so I don't feel like we've crossed the chasm of there's this great grand problem that crypto AI solves, and like this is the obvious way that you're making progress towards it, which maybe will happen in a few years.
I think that's true with DeFi too, though. When going back to like 2017, 18, when you started Gauntlet, these categories are just early. You know, we still call it just like crypto X AI. Like, what is that? It's just like this weird primordial soup where like various use cases and weird founders operate in. You know, I think I like that. I mean, I've sort of made most money like investing in categories before they have names.
You like the crypto XAI?
No, I like that it's so poorly understood. That's like where alpha comes from.
I see.
You know, like it's sort of hard to figure out there's no easy narratives around it yet. You know, you want to invest a little bit before the narratives. Hopefully they form eventually. But that's okay. Like, I don't know. I just think it takes a few years. Like, it would be really cool if like businesses could be run by 1 to 0 people, you know, and it was just all like intelligent designed over DAOs. But yeah, man, it's like it does seem way further away than even super intelligence, which is odd. Like,
right. That's
like
the
super
thing
intelligence,
that's
like
the thing
1 to
that's
2
weird.
years will create
Intelligence
God.
feels much closer
But like
than like
hooking
a
up an
crypto
AI to like trusted execution environment, that's like 5-10 years, you know.
I mean, what you guys are saying certainly is true. It's a lot easier to follow like the, you know, what has the last 5 years of AI progression done, and let's just add another 5 years and start imagining what super intelligence looks like. I think the crypto AI thing, you know, I've gone down this rabbit hole with a lot of inspiring people, and I'll say this, I'll give some of the alpha. It's hard for me to even I have not publicly communicated on this topic, but basically, I think the magic where it happens in the alpha is, in essence, we have the 3D space where we're all here. This is the human space. And then you have the machine intelligence space, which is obviously happening, you know, in silico, and you have this disconnect between, imagine like these are parallel realities that you've seen these movies like, you know, in space, Matthew McConaughey, you know, he's there, but then there's like these different dimensions. Just imagine 2 simple dimensions. There's the human dimension, we're all here. There's this, you know, digital AI dimension. What is the role of crypto? And it actually is the bridge. It's the money that combines the 2 worlds, because, you know, what is anything in the world? It's basically actions, and actions are driven by incentives. And how do we communicate with this like AI world? It's through, you know, something valuable, scarce money in essence. So if you imagine that I'm giving money to the AI, that's a way for me to influence its actions. And if it's giving money back, you know, it's giving money to people, that's like a communication from that dimension. So I know it sounds a little bit woo-woo, but if you start actually thinking about, you know, what does it actually mean for AI crypto, I think it's the bridge between these 2 worlds. Hopefully that made some sense.
I would just like add like a small thing here, which is like when you interact with, even before ChatGPT, GPT-3, anyone could see the power. Like, think about how much bullshit you have to wade through in order to see the power of crypto. Like, you know, where's the prompt box of crypto? So I think a lot of it, yes, narrative is important, all of that, but like, just like show people the power instead of like just talking about it.
So Amjad, you mentioned the sovereign individual, and Jordi, you referenced movies. What I so appreciate about what you said, Tarun, is you are talking about storytelling effectively. And so I think that what we're all gesturing towards is actually beauty. I think about beauty often. And I think the call to action here to founders, or actually people who are just simply believers in crypto, is not just, you know, leaning on people like Balaji who have done so much for our industry, or authors who wrote books years ago, but for people who are building new things, to think a lot about simplicity and elegance. When I am meeting with founders, I'm often looking for the removal. Like, if you're building products, like, etch away at the ugly, leave the simplicity. I think that's something that you guys have done very well at Replit. And I know when you guys are diligencing companies and looking at products, that's something that we're all looking at. And so this leads to my last question, which is, if you were to construct a thesis around AI, or a wish list of a product or a company, talk to me about what that is, or maybe it's an archetype of a founder. Share that with all of us. And it doesn't have to be in the next 6 months. We're long-term thinkers. It could be over the next 4 years. But certainly something that is pushing forward autonomy. We're all people who believe in agency. Otherwise, why would we be here? Crypto is fundamentally, I think, about the ideology of human agency. Whoever wants to go first.
Yeah, happy to share. The way I think about investing in crypto AI right now is it's very difficult to do actual AI inference, let alone training, like on chain in a fully decentralized way. But I but it's still generative AI. This transition that happened with GPT 3.0 is like the biggest sort of tailwind in technology and in the economy right now. And so there's tons of those like tailwinds to pick up that blow things in crypto. So I like investing in like pre-AI on chain. So for instance, like what are the ingredients that go into making intelligence? You have like data, compute, models. You kind of mix those three things in a bowl and you get artificial intelligence. And so all of those are like digital resources that are very scarce and are run by massive monopolies that are like trillion-dollar companies. And those companies like guard them religiously, and it's very hard to access, like NVIDIA chips and Microsoft Cloud and stuff like that. But there's all these interesting marketplaces and financial tools that crypto has come up with to allow you to like tokenize and trade and share GPUs on chain and things like that. And this is all infrastructure, right? It's all like tooling that allows AI inference to happen on the edge and on chain over time. But it's essential, right? And the market sizes of these are really massive. And I try not to get hung up on the founder stuff too much because, like, I don't know, Jack Ma was like a school teacher, and Abe Lincoln like lived in a log cabin and didn't go to college. I don't know, like it's early eras, like to call for the people, like they make great founders, who go into these spaces who are like bold and stuff. But those are the areas that are exciting to me right now. And I would generally be short like AI trading. Like, man, I mean, like, I don't know. It's like Selini does AI trading, with like quant models and stuff like that, and Jump and Renaissance does AI trading. Like, we mere mortals should not get too involved with it, lest we lose our shirts. So,
yeah, like I said, by definition, if everybody could just have a ChatGPT make money for them, that edge would just disappear instantly. So it can't exist. For me, like I said, next 2 years, the massive use case I see is just around, personal wealth management. I think crypto's biggest problem out of everything, and we have a lot of problems, but the biggest one in my view is the misallocation of capital. We really have a lot of capital, and we just put it in all kinds of misallocated places. And so, in essence, using abstraction, which is such a powerful word because it kind of takes something very complex and gives it to people that don't need to study it. So using abstraction, using AI, and starting to actually allocate capital properly. Hopefully some founder builds it. I saw the Delphi guys are interested in this idea. If not, I'll have to incubate it. But somebody's got to do this.
I would love to see an attempt at building a market-driven developer infrastructure. Crypto is a detail of that. I think it's an important detail of that, but I wouldn't say, it's a crypto native package manager. Just build like a package manager with incentives and protocols built in so that like AI agents, such as Replit's coding agent, could be able to provision a database by paying via crypto to some developer somewhere, be able to pay for a proprietary package so that open source developers are able to make money. So to make it so that commerce is built into the act of software creation. I think it's such a powerful idea, and there hasn't been an attempt at it that is pure. A lot of it just has a lot of complications around it. So protocol for provisioning and creating software could be very, very powerful with incentives aligned.
I think crypto is very good at making contests. Mining was a contest. Staking to some extent is a contest. DeFi is a contest. somehow there's never been very good contests in AI in some sense, whether it's for bug bounties or whether it's for energy reduction. Like, how do I get an algorithm how do I incentivize the person who has the open source algorithm with the lowest energy usage? And so figuring out the right set of contests that map well to crypto incentives that can be built today, which might be things like the energy usage one. That's the one I think is like the easiest.
You're giving examples like Freza, basically, where people are trying to compete to hack the private key from a LLM, that kind of stuff.
Yeah, exactly. Like, I feel like crypto is good at contests, so like lean into that.
My wish list is a beautiful mobile application that is built on blockchain rails, a very simple ask. We are at the end. Thank you so much for this fantastic panel, and thank you all for coming this morning.
Thank you.